Biggest asset class in the country, property. Not so cool to buy as an investment any longer. We're going to unpack it. Stay tuned.
Good morning, everyone.
Oh, Billy, I just got to show you this quickly. This is disgusting. This is disgusting. This is horrific. Look at this.
I know.
This is the amount of people that have bought investment property is the black line. It's not cool to buy an investment property. And this is the amount of investment property that's being sold the last 10 years. It's cool to sell your investment property.
We're seeing it on the ground when we're just surprised with the amount of sort of, tenanted properties we're selling. So say out of 20 listings, when 17 of them are investments, it does get you thinking. But to see it on the graph like that, it puts it into perspective on a bigger picture, how many people are selling investment properties and how little, sort of investors re-entering the market, which all leads on to other issues like tight rental situations and many other things like that.
Well, that's it. And it's not going to let up. It's not letting up. It's there's not more. It's not going to, it appears that it's not going to be that cool to be an investor in the next 1, 2, 3 years. It appears that there aren't going to be a lot of properties built in the next 1, 2, 3 years. It appears that's going to put pressure on rents. The scarcity of investment property is going to put pressure on rents going up. Like at the moment, being a landlord and buying as an investment property, we're doing a lot of open houses. We're meeting a lot of people. We don't meet a lot of investors.
Yeah, there's just no incentives really. They're getting smashed by stamp duty and other taxes on the way in and on the way out. And then to hold some of these properties, they're just not giving the same return that they can first of all get in the bank and do absolutely no work, or put it into shares, put it into other ventures. And I was talking to a guy who came through the other day and he was doing just some basic numbers on a calculator on his phone in front of me at the property. And he was saying, I'm looking for an investment that puts money back into my pockets, not takes it out. And I'm like, well, can't argue with that outside of capital growth.
Yeah, I similarly, I was reading something from a massive story that was dropping, and the guy was talking about what shit rental returns are after your interest and your strata, your land tax. Just saying, it was rubbish rental returns. But I felt like writing back in the story and saying, mate, you've missed the whole purpose. The whole purpose of an investment property in certainly the last 50 years has been that the asset will double every 10 years. That's what it's done for 50 years around our suburbs, northern beaches, North Shore, lower North Shore, upper North Shore. That whole region, it's doubled every 10 years for the last 50 years. So, yeah, I get that you're not getting your 5% return or your 3%, 4% return's a bit rubbish, but the whole game's always been about capital appreciation, which comes in closer to 10%. So, it's a pretty performing. When you add 10% to 3% or 10% to 5%, you're returning about 15% a year. But the thing that everyone misses is that most of it is not your money.
Yeah, that's the big catch.
That's the big catch. So when you want to buy sometimes stocks, or if you want to buy sometimes Bitcoin, people will talk about a 15, 25, 35% return on your money. But with property, you're only putting in 20%, but you are benefiting on rent and capital growth on 100%. So 80% of it that's not your money you're benefiting from, and 20% of it that is your money you're benefiting from. So in short, when I was reading that article about the guy saying there's better assets to buy out there, none of those assets that I was reading, the guy was writing about, would the bank lend you money on.
That's really interesting. I've never thought of it like that. I think that's yeah, that's going to be a really good one to just point out to people. But a couple of comments here. We got capital cities, lower risk. Bye. Good morning, Luke. We need investors, and government needs to incentivize investors. Mark, have you seen any incentives out there in the past? If it's been a tight rental market, has this ever happened before?
Well, I haven't seen incentives to the investors for more than 20 years. The last incentive that I can record for investors in my mind would have been capital gain, would have been negative gearing, the introduction of negative gearing. In hindsight, that was probably more than 30 years ago. So I've seen the government incentivize first home buyers over and over and over and over and over, and every year or every 2 years there's something new for first home buyers. Something people shouldn't forget, and nobody talks about this, a first home buyer can be an investor.
It's true.
So everyone, like you, Billy, everyone's programmed the first home buyer to, this is your first home, and you would think, I'm not allowed to rent out the property. That is wrong.
Yeah, just after that 6-month period, once you've so-called lived in it, then it can be rented out.
Yep.
Which makes a great sort of way to get into the market and not get hit with those upfront costs with the stamp duty and things like that. It's more about banks allowing more lending. So yeah, we were talking off air in the car this morning, and you were saying it's about what the art of property is at the moment.
The art of property has changed, and again, going off the experience over those years, it used to be about buying that correct property. Do you buy a 1-bedder or a 2-bedder, or how much rental return is it? I got this one. This was a killer of a buy. The art of property now seems to be funding, which is not even about property. The nature of buying a property, the battlefield or the minefield of buying property now is very different to what it was 10 years ago or 20 years ago. The art of buying the investment property now is funding, and the art of funding is how you're pre-packaging yourself for the banks. The necessity for mortgage brokers is even more critical now, because they are the guys that know how to pre-pack their customers and plate them up to a bank. So it's very unusual. It's not anymore about Mr. Realtor, find me a great investment property. It's more about Mr. Realtor, find me a great broker to find an investment property. It's weird.
Yeah, and I'm sure even Luke's experience, assisting buyers with trying to pick out a great property is there for a good service as well. I saw a couple of Luke's sort of property catches what they've sort of been buying recently, and that was interesting. Looking out of area as well, because it's they're looking at more than just a location.
Yeah, but it's holding that hand, and I think, and for anyone who's wondering who Luke is, Luke's a mortgage broker that can also help you. Buyer's agent that can also hold your hand and step you through the whole way. But even the real estate agent and even the buyer's agent these days, that I'm finding that step is. We're still doing everything we were doing, but the critical step of funding is so much more important. As an example, most people don't pass get-go when they're looking to buy a property, because they get knocked on the head with funding because they haven't pre-packed themselves properly. So if you've just tuned in, guys, we're talking about investment property. not so cool at the moment. Billy, I got to say, it's when everyone zigs, you should zag. And at the moment, if it's not so cool and people aren't getting into investment properties, I personally think that is the absolute perfect time to get in. Why would you do what everyone else is doing and then you have to pay a premium? Do it when no one else is expecting it, and then when it becomes cool, you're already in at ground zero, and up you go.
I think everyone's almost forgotten the 20% price correction as well. That's old news now.
Well, on $1 million, you're getting 200 grand discount on your property compared to 12 months ago. So a lot of Sydney has corrected 15 to 20%, which means you're getting 200 grand off, or 200 grand off, or 150 grand off your purchase. That is the mortgage you're taking on for the next 30 years. That is a fantastic discount. That is a good time to get into the market when that discount's come through. And then we all know that the rental markets for a landlord, the prospect of rents going up is pretty rosy. It's a great time. It's a great time.
It's actually, I think it has incentivized some people coming off short-term rentals a little bit more. It closed the gap. So where, as an example, property that was on Airbnb, maybe getting close to 1,000 a week. If your permanent rental was at 600 a week, it just didn't make sense. But if you could get that closer to sort of 800 or 900, then people were saying, I'm not going to do the work anymore for the short-term rental for that premium. I'll secure a tenant in. I think that's becoming a little bit more common now.
And I was laughing, that same article I was reading the other day, I was laughing because the guy was saying, it's no longer a good time to buy an investment property. It doesn't pay for itself. I'm thinking, what investment do you make that doesn't hurt? What good comes in life that doesn't hurt, right? What commitment can you make that is not a commitment? Like, it is buying an investment property and taking money out of your pocket is just how it is in Sydney. Now, it may not be in some parts of regional Australia positively geared, but in all parts, like if you want to buy a good property, generally it's money's not for free. You don't just go and buy something, costs you nothing in terms of per week or per month or per year, and it doubles in value every 10 years. Like, come on, let's face it, there's going to be a little bit of pain for long-term gain.
No pain, no gain. That's I think that's the show. But the most important nugget I got out of this one is just remember, with property, it's 10-20% your money, 80% someone else's, but you're getting the full gain. That's the big one. Big time.
So guys, get into an investment property and have a great week.
Have a good week, guys. Happy Monday.
Thanks, Billy. Cheers, mate.